So we've seen restaurant attendance take a bit of a big hit so far in December. And also journeys on public transport have similarly fallen. And in London in particular, even visits to retail and recreation sites have also dropped back a bit. So it's clearly households are already responding by changing their behaviour in response to the surge in COVID cases. And that's even without formal government restrictions that are sort of limiting movement of households. The big risk in the new year is that the government does impose more formal restrictions. A lockdown does look a little bit less likely at the moment, but it's so uncertain. We don't really have the data to sort of decide anything on that yet. Sort of light touch restrictions could easily subtract 1 to 2 percentage points off the level of GDP growth early next year. So clearly it is a very, very important and big risk facing the UK economy next year.
Now, we got that surprise hike, I suppose, from the BOE coming through, but business investment does remain requisitely weak. Do you think that the BOE should hold their fire in order to, I suppose, encourage further foreign investment into the United Kingdom by keeping the pound a little bit lower?
Well, the Bank of England has, reading between the lines in its recent communication, it has repeatedly stressed that it's much more concerned about the outlook for inflation than it is the outlook for activity. So yes, as you say, business investment is still quite a bit lower than it was pre-virus, but it's difficult to sort of disentangle that from the Brexit effect as well. And as long as some Brexit uncertainty remains, it's going to be a continued difficult environment for businesses to invest. It looks like the Bank of England, we think they're going to hike twice next year. We think they're going to raise rates once in May and the second time in August, which will take rates to 0.75% by the end of the year. That's a bit more dovish than investors who have almost fully priced in 4 rate rises, bringing bank rate to nearly 1.25% by the end of next year. But it's really, it's hard to say. The Bank of England has surprised many investors and ourselves actually in the past few months with how much more weight they're placing on the risks to inflation. So it's hard to say.
Surprised investors. I think you're being polite there, Bethany, because I mean, the last meeting we had several days ago, on the one hand, on the surface, it looked as though they finally delivered on the promise, right? Rather than looking like an unreliable girlfriend, they finally started looking more like the kind of girl that you want to take home to meet the parents. But the thing is, they finally pulled the trigger and hiked. Then Omicron, is that why you're at 2 hikes for next year when a lot of people are at 4?
Yes, well, actually, we have 2 hikes for next year because we think that inflation is going to fall back a lot faster than most investors expect in the second half of next year. So we don't think that bank rate will need to rise as far or as fast as investors currently expect. But it is funny, as you say, that they hiked right in the middle of all these risks about Omicron, and it really does kind of underline to us that the bank is much more concerned about the outlook for inflation than it is for activity.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.